Today I'm going to share my thoughts on whether Tesla is under, over, or fairly valued at the current price of around $600 per share. I'll be reading through some interesting tweets from Gary Black about TSLA's correlation to Bitcoin and how Tesla stock is getting held back by it. I'll also talk about some recent activity for Tesla. Let's go. It's been a little while since I shared my thoughts on Tesla stock. On the year, it's down double digits and approximately 20% in the last month. I'm a big Tesla bull. I've made many previous videos on the business and even a full hour-long documentary on the company's early days. You can check that out in the description if you want. Anyways, as we all know, the stock market for growth and technology companies has been brutal this year, but ultimately, that only is a problem if you are looking to sell. If you're holding, you should feel fine. And if you've been buying with dollar cost averaging, you should feel great. Right now, I find great value in Tesla stock as this consolidation continues. We don't know how long it will last or how low the stock could potentially go, but I remain convicted in Tesla and also believe we could see a rally and the next leg higher, leading to all-time highs not too long from now. That seems far off, which is my point. Tesla stock to $1,000 from $600 is a whopping 67% gain. Personally, and this is not advice of any kind, I think over the next 6 to 18 months, that increase is a real possibility as those that have taken money out and even more buy back in on top of TSLA's improving fundamentals. Here's Gary Black on the subject. On fundamentals, TSLA is an $800 stock. EV adoption 3% today and will 4x by 2023. Tesla growing EV share as total addressable market quadrupled with Model Y, Cybertruck, and upcoming Model A. FSD is a clear differentiator versus other EVs. EPS estimates going higher and price to earnings should stabilize once Bitcoin link is broken. I agree with all of that, and while it's a bit bizarre, I don't foresee Tesla selling any of its Bitcoin. Elon said they aren't, and I believe him. It's counterintuitive to attack an asset you own, but that's just Elon. He knows that Tesla's Bitcoin is relatively insignificant on the balance sheet, and they wouldn't have purchased it if it was. So it won't stop him from speaking out against the energy usage. Let's continue. TSLA has great fundamentals. What other mega cap growth stock is posting 70 to 80% volume growth this year and next? Tesla just needs to detach itself from its insignificant Bitcoin position, which at 0.3% of Tesla's market cap just keeps dragging it down. I do think that, as small as the position is, investors can't help but be irrational about it. If Bitcoin goes down, traders will sell Tesla. It's a correlation that has, since its beginning a couple months ago, not helped TSLA stock at all, which is likely why few big companies haven't followed just yet. Now, a few months is not enough time, and I do think investors will eventually get over the idea of Bitcoin being on many companies' balance sheets. It does, currently, nonetheless, offer some increased downward pressure, which has, in turn, in my opinion, given us all a great buying opportunity. So lastly for this video, Michael Burry, the investor made famous for predicting and profiting from the subprime mortgage crisis, is betting against Tesla shares. His firm owned puts that gave him a bet against more than 800,000 shares of Tesla as of March 31st. Though the details of the put contracts are unknown, investors profit from puts when the prices of the stocks they are betting against decline. The author here shares 3 specific reasons why he wouldn't bet against Tesla. I will follow up with my thoughts in a moment. Number 1, explosive sales growth. And before I read that, Elon Musk did tweet out this morning that Tesla will be holding its Model S refresh launch event on June 3rd, which is very exciting to get those vehicles out into the wild. And it's a bullish sign for those production lines since they have been a little delayed. There are certainly some concerns about Tesla's business. One issue Burry has brought up is that Tesla has relied on selling its zero-emission regulatory credits to other automakers for its profitability. Of course, this is more of a bearish thesis and it has been countered many times. Tesla does not need the credits to survive, they just use them to their own benefit as an accounting practice, and it actually accelerates their investments. In Tesla's first quarter of 2021, for instance, $518 million of the company's $594 million of income from operations came from the sale of regulatory credits. All that tells me is that Tesla is efficiently and effectively using those credits to propel investments into R&D and other sectors. But there's one thing that Tesla has going for it that any investor betting against the stock should carefully consider. Its vehicle sales are skyrocketing, capturing both the company's aggressive expansion and consumers' growing interest in Tesla's products. Trailing 12-month vehicle deliveries are up 52% year over year, and management expects similar or even better growth for the full year of 2021. And I do think Tesla will come close to 1 million cars produced and delivered for 2021. I don't think it's necessary for them to stretch and try and hit over 1 million, but I do think they will be close. If Tesla can keep up this strong sales growth in the coming years, it's possible that the automaker will benefit from significant economies of scale. Indeed, Tesla management expects exactly this. The company regularly tells investors that as sales grow, it expects its operating margin to continue to widen, eventually reaching industry-leading levels. And this is something I choose to believe from Tesla. Number 2, a massive market opportunity. It's also worth noting that electric vehicles still represent a tiny fraction of the overall auto market. Indeed, internal combustion vehicles accounted for 97% of vehicles sold globally last year. If vehicle sales hit a tipping point in which electric vehicles become the preferred new car choice, in my opinion, only a matter of time, Tesla will be positioned well to benefit from a massive tailwind from one of the biggest industry markets in the world. Very well put. Number 3, it's okay to watch from the sidelines. Finally, it's perfectly fine to stay on the sidelines of a polarizing stock like Tesla. Whether you believe in the company's long-term potential or are skeptical about its financials or its high valuation, this doesn't mean you have to place a financial bet for or against the stock. The reality is that the automaker's mix of rapid business growth and sky-high valuation has made it difficult to form a good opinion on the stock. Sure, the company seems to be executing extraordinarily well, but strong execution for years to come is priced in. For shares to outperform the market over the long haul, Tesla will need to maintain its leadership, continue growing rapidly, and execute well on its more speculative initiatives like autonomous driving and its nascent energy business. On the other hand, betting against Tesla amid such incredible growth and execution seems particularly risky. Fortunately, however, there's no need for investors to do anything. Sitting on the sidelines is totally fine. As for my thoughts, I think Burry is going to get destroyed. And as for my moves, I've been buying into Tesla, dollar cost averaging the whole year. My price per share is actually now just below $700. So of course, not great considering the stock is under 600, but I will be continuing to add tomorrow and aggressively until the stock rises above my cost basis for 2021. So if I'm right about Tesla surging higher in the next year or so, once the macroeconomic environment clears up, Burry's position is going to end up being incredibly costly. So far, I believe he's up a good amount on the position since the stock has suffered recently, and I think he'd be served well to close it out now or soon, but I doubt he will. Overall, he's making a huge mistake betting against Elon. Tesla stock is trading at a relatively fair valuation in my eyes, and is extremely undervalued given an extended time horizon, and Musk's run-in with Bitcoin and constant affinity towards Dogecoin is only accentuating this. Those are my thoughts. What are yours? Until next time.